and you're watching News 9, English news as it should be.
A very good morning. You are watching News 9. This is Morning Brief at 9. I'm Karthik Malhotra. The big question that we ask on the show this morning is whether there is an agriculture crisis brewing in India. It's not a double whammy, but triple trouble for India's agriculture sector and overall for inflation and impact on the economy. We'll tell you all about that on the show this morning. Also on the show, after Australia, it's now the turn of European leaders to up the ante against social media addiction. We'll tell you what Keir Starmer and Emmanuel Macron have to say on the subject. And finally, the controversy surrounding TCS and Lenskart. Do investors really care about it? We'll get you an expert opinion. All this and more on this edition of Morning Brief at 9. All right, let's get the show started. This is Morning Brief at 9 this Friday morning. A quick look at all the headlines we're tracking for you. US President Donald Trump says Washington and Tehran are very close to a deal, claiming Iran has agreed to hand over its enriched uranium, though Tehran has disrupted and disputed the assertion. President Donald Trump downplays U.S. conflict with Iran as a little diversion, even as polls show growing public unease over the war. Trump also says he hopes Hezbollah will act nicely after a fresh 10-day ceasefire between Israel and Lebanon talks effect. Trump says Pope Leo, the spiritual leader of over 1 billion Catholics, can speak freely but must grasp the realities of a nasty world as tensions rise over the US-Israel war with Iran. The US House rejects an effort to curb Donald Trump's authority to continue military action against Iran, dealing a setback to lawmakers seeking greater congressional oversight. French President Emmanuel Macron and UK Prime Minister Keir Starmer convene allies to explore a force securing the Strait of Hormuz after the US-Iran conflict. The International Monetary Fund and World Bank move to re-engage with Venezuela, opening the door to renewed financial support. Netflix stock drops sharply after underwhelming results as co-founder Reed Hastings announces his departure. And UK Prime Minister Keir Starmer and French President Emmanuel Macron step up pressure on tech firms, calling for stricter controls and reduced screen time for children. The top story we are bringing to you this morning. US President Donald Trump says the war in Iran is progressing swimmingly and could be nearing an end. Now, speaking at an event in Las Vegas, Trump expressed confidence that the conflict should be ending pretty soon, even as tensions remain high. Now, taking a diversion from his previous statement on permanently opening the Hormuz Strait for China and the world, Trump pointed to the situation at sea, saying tankers in the region are being stopped as part of ongoing efforts to restrict Iranian-linked shipping. Now, these remarks come amid a US-led blockade targeting vessels connected with Iranian ports, which has already disrupted traffic through the Strait of Hormuz and impacted global oil flows.
I will say the war in Iran is going along swimmingly. We can do whatever we want. And it should be ending pretty soon. It was perfect. I mean, it's perfect. It was the power we have, our military. We have the most powerful military anywhere in the world. I built it 4 years, my first 4 years. We had the best economy in the history of our country in my first term, and we're blowing it out now. We're blowing it away now. And despite our little diversion to the lovely country of Iran, lovely place, but we had to do that because otherwise bad things could happen. The ships are out there today and they're saying, don't come here, Don't even think about it. And you have these massive tankers saying, let's get the hell out of here. It's amazing. It's amazing.
And that's Donald Trump, the President of the United States, for you. Well, a sharp exchange is unfolding between Washington and the Vatican over the Iran war. US President Donald Trump said it is very important for Pope Leo to recognize that Iran poses a global threat, even as he acknowledged the pontiff has a right to disagree. Now, Trump has repeatedly criticized the Pope, who has emerged as a vocal opponent of the US-Israeli campaign in Iran.
The Pope has to understand that, very simple. I have nothing against the Pope. His brother's MAGA all the way. I like his brother, Louis. I'm not fighting with him. And if the Pope looked at the 42,000 people that were killed over the last 2 or 3 months as a protester with no weapons, no nothing, I mean, you take a look at that. So I can disagree with the Pope. I have a right to disagree. I have a right to disagree with the Pope. I have no disagreement with the fact the Pope can say what he wants, and I want him to say what he wants, but I can disagree. I think that Iran cannot have a nuclear weapon. If they do, the whole world would be at jeopardy. The Middle East will be blown up and the whole world will be at jeopardy. We're very close to making a deal. That'll be a great thing. The Pope has to understand Iran has killed more than 42,000 people over the last few months. Think of it, protesters without guns, without anything. They were totally unarmed protesters. The Pope has to understand that. This is the real world. It's a nasty world.
And the US president is now pushing for the next step in West Asia diplomacy. After announcing a 10-day ceasefire between Israel and Lebanon, Trump said leaders from both sides could meet at the White House within the next 1 or 2 weeks. He confirmed he spoke to both leaders ahead of the ceasefire and is now working towards a more permanent agreement.
It's very exciting. With Lebanon, it's very exciting. I think we're going to have a deal where we're going to have a meeting, first time in 44 years, and Lebanon will be meeting with Israel, and they're probably going to do it at the White House.
When do you think, President, when do you think they will?
Over the next week or two.
Or the next week, and do you think this agreement can reach?
I do. I think
without
we're gonna,
Hezbollah
I
agreeing
think
to
we
the
will have an
government?
agreement between Lebanon, and they're going to take care of Hezbollah. But they're going to be working on Hezbollah right now. But we'll have an agreement between Israel, very importantly, and Lebanon.
Will you support our Lebanese army as well?
I would. I would. Yeah.
Iran's going to execute.
Has Hezbollah agreed to this ceasefire? I mean, how do you even?
They're all agreeing. It's a very nice little package for about a week, and we're not going to have lots of bombs dropping, and we're going to see if we can make peace between Lebanon and Israel.
And Donald Trump on Friday said he had a very good conversation with his friend, India's Prime Minister Narendra Modi, highlighting strong US-India ties amid the escalating West Asia crisis. Now, referring to their recent phone call, Trump said the discussion focused on bilateral relations and regional security concerns. The Trump-Modi call comes against the backdrop of the ongoing conflict involving the United States, Israel, and Iran. The leaders exchanged views on the evolving situation in West Asia, including the implications of the Iran war on global stability and energy markets. The United States and Iran had earlier agreed to a 2-week ceasefire on April 7th, followed by peace talks in Washington. Now, the U.S. has been pressing Tehran to abandon its nuclear weapons ambitions and halt uranium enrichment.
Mr. President, you spoke with Prime Minister Modi just a couple of days ago. What was the conversation like? What is it that is on the table now?
I had a very good talk with him, and he's a friend of mine from India, and he's doing great. We had a very good conversation.
Well, the United States sent yet another warning to Iran on Thursday. Sign a deal or face renewed military action. Top defense officials say U.S. forces in the region are locked and loaded, ready to restart combat operations at short notice if negotiations fail. U.S. Defense Secretary Pete Hegseth said Iran now has a choice between what he called a prosperous future or further escalation. Listen in.
We are reloading with more power than ever before and better intelligence. Even more importantly, better intelligence than ever before, as you expose yourself with your movement to our watchful eye. We are locked and loaded on your critical dual-use infrastructure, on your remaining power generation, and on your energy industry. We'd rather not have to do it, but we're ready to go at the command of our president and at the push of a button.
And at the same briefing, Pete Hegseth also said China has assured the United States it will not supply weapons to Iran during the ceasefire.
Well, as you know, President Trump has a very strong and direct relationship with President Xi, and they communicated on that, and China has assured us that that indeed is not going to happen, and in the spirit of the meeting they'll have next month. Thank you very much.
And on to the economic impact of the war in West Asia. Well, Asia could be the hardest hit if the Iran conflict disrupts energy supplies. An IMF official says the region is more vulnerable than others because of its heavy reliance on oil and gas from West Asia. Now, this comes even as Asia entered 2026 on a relatively strong footing, supported by lower US tariffs, a robust tech export cycle, and easy financial conditions.
First, a larger or more persistent energy shock would hit Asia-Pacific countries unevenly. Second, economies that depend heavily on imported energy use are especially vulnerable. Third, risks are greater still where energy buffers and fiscal space are limited, or where remittances, tourism, or fertilizer imports add to the exposure. This matters in parts of South Asia, Southeast Asia, and key among the Pacific Island countries.
And in more economic impact, Britain's budget airline EasyJet has flagged trouble ahead of the Iran war begins to hit the aviation sector. Now, the airline has warned of a bigger than expected first half loss, saying bookings are lagging compared to last year due to the ongoing uncertainty. Rising fuel costs are a key concern, with oil prices surging sharply since the conflict began, adding pressure on margins.
EasyJet warned it has felt an impact from the Iran war on Thursday. The budget airline said it would lead to bigger losses, and further added bookings were down compared to last year. It now forecasts a headline pre-tax loss of $733 million to $761 million for the first half, much higher than a year before. EasyJet said summer bookings were below year-ago levels, with the third quarter 63% sold, compared with 65% last year. The market will look for any sign of the conflict's effects on the fragile profit margins and revenue of European airlines, especially with carriers from the region due to start reporting first-quarter results in the coming weeks. EasyJet rival Wizz Air has already said its annual net profit will take a near $59 million hit. The conflict has sent jet fuel prices soaring. That's forced airlines to raise fares, cut growth plans and rethink forecasts. EasyJet said the Iran war has caused near-term uncertainty around fuel costs and customer demand. The update sent EasyJet shares down as much as 9% and dragged other budget airlines with it.
All right, from one war, let's move to the other. Ukraine's capital, Kyiv, has come under heavy Russian attack overnight in one of the deadliest strikes in recent weeks. At least 17 people have been killed, with dozens more injured, according to Ukrainian officials. The latest escalation comes even as global attention remains focused on the other flashpoints, showing the Ukraine war is far from easing.
Russia unleashed its deadliest attack so far this year on the Ukrainian capital Kyiv and other cities overnight on Wednesday into Thursday. More than a dozen people were killed, including a 12-year-old child, while scores more were wounded in drone and missile attacks, officials said on Thursday. The morning saw residents and emergency crews cleaning debris scattered around heavily damaged buildings in the capital. Several people, including the child, died in Kyiv, Mayor Vitaly Klitschko said. Near a high-rise apartment block damaged in the strikes, local resident Olena Kapustyan said the building had been hit before.
I fear for our country and for everything we have, for the people. I feel so sorry for the children. So many people died today. Children died.
Prosecutors put the number of injured in the city at least 60. Ukraine's Air Force said its units shot down or neutralized over 30 missiles and more than 600 drones, but 12 missiles and 20 drones hit in the 24 hours to 7 a.m. local time on Thursday. President Volodymyr Zelensky said the night had proven that Russia did not deserve any easing of global policy or lifting of sanctions. Several people were killed in the southeastern city of Dnipro. where Russian attacks set residential buildings ablaze, according to regional officials, while at least 8 people were killed in an attack on a high-rise building in the southern city of Odessa, officials said. The regional governor said that port and critical infrastructure facilities in the city had also been damaged.
And from physical wars, let's move to the digital ones. The debate over screen time and online safety is intensifying across Europe. UK Prime Minister Keir Starmer has warned social media companies that things can't go on like this after summoning top executives from major platforms to Downing Street. The government is now considering tougher rules, including setting a firm age limit for users and restricting addictive features like infinite scrolling. And it's not just the UK. French President Emmanuel Macron has called for a digital detox among young people. He urged high school students to switch off their phones and spend more time reading, proposing one no-screen day every month. Take a look.
Speaking to a group of high school students on Thursday, French President Emmanuel Macron urged them to turn off their screens completely, at least for one day each month.
On vous a laissé un peu dans cette jungle.
We left you in this jungle, and it robs you of your attention. I mean, you're getting more and more used to staying in front of a screen, going from one content to another quickly, very short videos.
Des vidéos très courtes.
And we can see that it has even become more and more difficult for you to watch a movie, to read a book.
Lire un livre.
In addition to one no screens day per month for all, Macron is also pushing for a blanket social media ban for children under 15 years of age. France is among at least a dozen European countries that have enacted or are considering legislation to set minimum age limits for social media usage, following Australia's groundbreaking ban launched last year.
This app gives parents, teachers, caretakers a powerful tool to protect children.
Meanwhile, European Commission President Ursula von der Leyen said this week that the EU's age verification app for online platforms is ready and will be rolled out soon.
We are holding online platforms accountable that do not protect enough our kids.
She said the app, which will be compatible with both mobile devices and computers, will require users to upload their passport or ID card to confirm their age anonymously. The Commission has been developing a harmonized digital verification system since last year. Controlling children's access to restricted online content presents governments with technical challenges. Australia has seen a huge spike in downloads of virtual private networks since it introduced its social media ban, as users seek to bypass the measure to access restricted platforms. A senior European Commission official acknowledged the issue but said the initiative was not aimed at policing people online. No EU-wide binding legislation has been adopted yet, but in November, the European Parliament approved a resolution report calling for a minimum age of 16 for social media access across all member states. A final decision on potential EU legislation is expected in the coming months. In France, where the draft bill to ban those under 15 from accessing social media is going through Parliament, students expressed mixed feelings about losing access. In general, people had a taste of social media too early in life, and so they cannot let go of it so easily. I agree that it should be banned for those under 15 because there is cyberbullying in social media. There are so many things that can make you paranoid, and you may feel unwell because of social media.
Moving on, OpenAI chief Sam Altman has moved a U.S. court seeking dismissal of punitive damages claims in a civil lawsuit filed by his sister. The case relates to allegations of sexual abuse dating back more than 2 decades, which Altman strongly denies. The development marks the latest step in an ongoing legal battle, with the court now set to examine the scope of the claims.
It's critical.
OpenAI Sam Altman is seeking the dismissal of punitive damages claims in his sister's civil lawsuit. Annie Altman accused him of repeated sexual abuse more than 2 decades ago, an accusation he denies. In a filing late on Wednesday in St. Louis federal court, the OpenAI co-founder and chief executive argued that Missouri's child sexual abuse statute does not authorize punitive damages for his sister's claims and instead limits her to, quote, damages for injury or illness caused by childhood sexual abuse. He said punitive damages are also unavailable for conduct he allegedly committed as a child and renewed his request to dismiss the lawsuit altogether. Lawyers for Annie Altman did not immediately respond to requests for comment. Annie Altman accused her brother of sexually abusing and raping her between 1997 and 2006 at the family home in suburban Clayton, Missouri. She said the abuse began when she was 3 years old and he was 12. She claims that the quote, last acts of sexual abuse and rape occurred when Sam Altman was an adult. The Altman family has said that Annie Altman has mental health challenges and received financial support. Sam Altman said his sister began accusing him on social media of sexual abuse after they rejected her extortionate demand for, quote, greater and greater financial support. Her lawsuit began in January 2025. Altman is also countersuing his sister for defamation over her posts. He is seeking $1, saying he, quote, does not want to harm his sister financially, but wants a verdict that her statements are not true.
And the AI boom is continuing to power the chip sector. TSMC has raised its full-year revenue forecast and plans to ramp up capital spending. The world's largest contract chip maker says demand for advanced AI chips remains extremely strong as tech companies race to build computing capacity.
TSMC raised its annual revenue forecast on Thursday. The tech giant further said it's stepping up capital spending this year. That as the world's biggest contract manufacturer of advanced AI chips tries to meet massive demand for its products. The bullish outlook comes after the company, which is a major Nvidia supplier, said first quarter profit leapt 58% to a record $18.2 billion. That was well ahead of expectations and marked its 8th straight quarter of double-digit growth. CEO C.C. Wei said TSMC was being prudent in planning due to uncertainty caused by the Middle East conflict. He also said AI-related demand was still extremely robust. His remarks were likely to ease investor worries about the impact of the war. He added full-year revenue in US dollar terms would grow more than 30%. That's up from a previous forecast of close to 30%. While capital expenditure would be at the high end of its earlier guidance of $52 billion to $56 billion. Looking ahead, TSMC forecasts sales between $39 billion and just over $40 billion for the current quarter. That's well up from the same period last year and a jump from close to $36 billion in the first quarter. The huge demand for high-performance chips needed for AI has driven Asia's most valuable company to new heights. TSMC shares have gained more than a third so far this year.
All right, with that, let's shift focus to the stock markets and let's begin with the United States. On Wall Street, the rally continues to hold up. The S&P 500 and Nasdaq notched record closing highs for the second straight day on Thursday as investors grew more confident that tensions in West Asia may ease soon. A temporary ceasefire between Israel and Lebanon and signals of fresh US-Iran talks have helped steady market nerves.
U.S. stocks closed higher on Thursday, with the Dow and S&P 500 each gaining about 0.25% and the Nasdaq adding more than 0.33%. It was the second straight day of record closing highs for the S&P 500 and Nasdaq, and the latter's 12th consecutive daily gain, marking the tech-heavy index's longest winning streak since July 2009. Stocks were buoyed by optimism that the worst of the Middle East conflict had passed after Israel agreed to a ceasefire with Lebanon, and President Trump said the U.S. and Iran could meet again for talks this weekend. But some believe clearer signals of peace may be needed to sustain momentum. Eric Lynch is managing director and co-portfolio manager of Suncoast Equity Management.
I think what we can conclude is it's still volatile. For obvious reasons. There's just a lack of visibility about what's happening in the Middle East and what that impact could be in terms of energy and other input costs across the economy. The bounce back since the inception of the Iran conflict has been pretty substantial. There's a lot of liquidity in the system. Earnings were strong. And so therefore, it doesn't take much for animal spirits to, rise back up.
Stocks on the move Thursday included Netflix, which plummeted about 9% in extended trading after the company announced that Chairman Reed Hastings is leaving the streaming service he co-founded 29 years ago. His exit, which will take place in June, comes as the company regains its footing after losing its $72 billion bid for Warner Brothers Discovery to rival bidder Paramount. The S&P 500's biggest decliner for the day was Charles Schwab, whose shares tumbled about 7.5% despite the brokerage firm posting record first-quarter profit. And shares of medical device maker Abbott slumped 6% to hit their lowest level since November 2023 after the company cut its full-year profit forecast.
All right, so that was the update on Wall Street. Let's shift focus now to Asian stocks, which so far were reacting fairly positively to the developments in West Asia. But this morning, some correction visible across the board. Look at the stocks of Hong Kong's Hang Seng. That index is down about 1.4% or so in trade. Japan's Nikkei 225 is also down more than 1% at levels of about 58,850. We are also seeing a sentimental sell-off across South Korea, Taiwan as well as China, with all three indices now in the red. So that seems to be the view coming in from Asia. No real spike seen in oil prices, and neither has there been a negative knock-on effect of the US. So what exactly is going on in Asia is something we will try to figure out on the show with a special guest joining us momentarily. Meanwhile, the Indian markets are also trading absolutely in flat. In fact, GIFT Nifty was indicating a 50-point upside, but that doesn't seem to be the case as markets are trading absolutely flat with an even mix of green and red visible across the charts this morning. Most of the stocks are pretty much unchanged from their yesterday's closing, and that seems to be the broader sentiment on no news triggers really moving the markets as a whole, while specific news-based events are showing some impact on individual stock prices. The most notable among them happens to be the tech services sector, including Wipro. And after the announcement of a 2% decline yesterday, Wipro stocks this morning trading down about 2.6% or so from yesterday's closing price. Remember, the news had come after the closing of markets yesterday. Meanwhile, even the finance sector is showing some sort of mixed cues this morning, while most stocks within the financial and BFSI sector continue to be in the neutral territory. A massive decline seen also in HDFC Life. That stock is down about 3.7% or so. Remember, the results for HDFC Life had also come out yesterday, indicating a 4% growth. Meanwhile, let's pull up the charts and take a look at the Sensex and the Nifty 50 this morning. Both in the green territory, more or less flat, just a double-digit growth in points is what is visible. Sensex pretty much trading almost exactly at the same levels as yesterday, albeit a little higher than the 78,000 levels. Nifty 50 also up about 12 points or so, marginal increase if one can call it that at all. Amit Kumar Gupta, founder of Fintrek Capital, joins us this morning for more on what he's really making of the market moods this morning. Good morning, Amit. Pleasure having you back here with us on News 9. No real sentimental movement visible in markets, but the rest of Asia, barring India, is deeply in the red this morning. What is triggering the losses in the larger Asian markets?
Yeah, hi, good morning, Karthik. Thank you for having me. So I think, not much, markets have been already stabilizing after quite a heightened volatility in March. We have a good run since 8th of March when the ceasefire was announced. So it's a little bit of a profit taking ahead of the weekend, I guess. As far as the Indian markets are concerned, the fourth quarter results and the FY27 guidance will decide the market's future direction from here. So my sense is that we are already 10% up from the bottom. So markets may pick up volatility from here, sort of stabilize a little bit and be in a range of 23,500 to 24,500, thereby giving opportunities for both bulls and the bears for buying and selling. But I think till the earnings season is on, there could be some range bound movement on a sort of next 30 to 45 days basis.
All right, so range bound movement given the earnings season. Let's talk about the earnings seasons and let's look at the Nifty 50 stocks, some of them which are reporting results and some which are due to report. Wipro, of course, has reported almost a 2% decline in net profit year on year, while it has shown a more than 12% rise sequentially over quarter 3. That stock is absolutely getting hammered this morning. It's down almost 3% right now as we speak. Amit, overall, the commentary not positive at all, even though Wipro is suggesting that things could change in FY27. But how do you view the stock right now and a price correction on a day like today? Is this an opportunity to invest in the stock or hold off for some time?
It was another weak revenue performance in Q4. Mainly, there was a delayed ramp up in some of the large deals which they cracked. There was a softness in the specific BFSI accounts. So the services revenue only grew by about 0.6% quarter on quarter. So that was below the street expectation. So I'm not surprised it is down about 3-4% this morning. Even the EBITDA margins have declined about 30 basis points. Overall, I think even the management guidance is pointing towards flat to -2% quarter on quarter revenues. So I think it will take a little bit more time for to happen. Remember, even Q1 is likely to face headwinds from the fact that there will be a salary hike rollout given in March. And the large deals which they have bought, those are of sort of low margins. They are making investments in Wipro Intelligence. So it will take time to, sort of find a bottom into this. The only good thing is that they have announced a buyback of 600 million shares at 250 per share.
Right.
So total of around 150 billion rupees. That's what is there. So what I like is that there was a healthy deal intake, even though it's slow in implementations. What is I don't like is revenue miss and the softness in the BFSI and the healthcare sectors.
All right, so softness in the BFSI and the healthcare sector is a worrying concern. Let's move on now to HDFC Life, which has reported a 4% growth in net profit year on year, announced a dividend of ₹2.10 per share. But again, markets and investors not really liking what they are hearing. That stock is down about 3.5% or so in trade, despite a 4% growth in net profit.
Yeah, overall, I think the numbers were weak. Whether it is the margins or whether it is the premium equivalent, both were down quarter on quarter and below the estimate. Generally, insurance sector is quite heavy on Q4 side because of all the tax saving which happens. So Q4 is generally heavy, but there seems to be a lot of one-offs. And apart from that, the management commentary which has gone, that does not really give confidence, at least for Q1. The main spoil sport was the lackluster show in the HDFC Bank channel on account of the aggressive offering in the non-par by competitors, which caused there is a market share loss for HDFC Life.
Right.
That has also led to a slower premium equivalent growth also. And remember, from 1st of July, we are getting the new norms for mis-selling as well. So I think there is a confluence of a host of factors which is causing the growth and the margin mix in the FY26.
Right.
So we'll see how FY27 sort of turns up. But as far as the current situation is concerned, I think all the negatives are priced in.
All right, so rates are priced in. Meanwhile, it is going to be a busy weekend ahead because Saturday, that's April 18th, is going to be the announcement of the big ones, HDFC Bank and ICICI Bank. But looking at the charts this morning, investors are pretty much holding on to positions. In fact, a little bit of selling seen in ICICI Bank. What are the expectations from the core banking sector as they announce their results tomorrow?
I think in general, like what we have seen with the certain smaller private banks which have declared the result of Q4 is not so much impacted. So I expect, both ICICI Bank and HDFC Bank to sort of report stable numbers. But we have to see, how going forward the MFI and the unsecured lending book is, turning up because of the stress due to the Iran war. That will probably take, probably 1 or 2 quarters. So probably by July, August, we'll come to know, how much stress is there. But if there is any commentary which sort of front runs this stress, then, market can react to that. But as far as Q4 is concerned, I think it's going to be stable. The market will concentrate more on the FY 27 guidance, especially in the Q1.
All right, so all eyes on FY27 guidance. Meanwhile, some of the stocks which are not exactly in earnings season, in fact, one of them has already announced its results and not bad numbers at that. But other 2 stocks which are pretty much in the eye of the storm for a very different reason. I want to understand from you, fundamentally, do investors really care about controversies? We've seen TCS, the Nashik employees, are now working from home amid the conversion case, which really came, first in social media and then became a main story. And similarly, even Lenskart, the sort of backlash that it is facing right now over grooming guidelines. Overall, do you think investors really care about this sort of controversial news emerging from listed companies? Because this morning, we are seeing Lenskart, in fact, is in the positive territory, albeit just, second decimal points, not really, in fact, now up about 0.2% or so. But overall, do you think investors really care about these controversies, or they are just purely fixated on what the balance sheet and the P&L tells you?
These things can be sentimental. I have to skip the question on Lenskart because I'm not really tracking that company and the news flow. But as far as the TCS is concerned, I think the issue has been dealt with seriously with an SIT investigation going on. But in any ways, it has not impacted the operations of the company. People are still working from home. Work from home is not a big issue now after post-COVID. So I think the operations are not, expected. It's a more of a headline thing and a sentimental driven. It is concerned with a very, few individuals only, 5 to 10 individuals. And the investigation, police investigation was going on for quite some time. So I don't think, investors should be too much bothered about all this. There could be some operational compliance which will come in. But apart from that, I don't think there's too much of an issue with respect to this headline.
All right, Amit Kumar Gupta, thank you so much. As always, pleasure having you here with us on News 9. We will, of course, keep having you back in days to come as well. Meanwhile, markets are pretty much trading absolutely flat this morning. Let's move on now to some global corporate stories that we're tracking for you. Luxury group Kering, that owns brands like Gucci, is betting on a big turnaround. The CEO, Luca Di Meo, has pledged to more than double operating margins as part of a strategy to revive growth and brand appeal. The plan comes as the company looks to regain momentum after a period of slowing demand across countries.
Kering CEO Luca Di Meo pledged to more than double profits on Thursday. He unveiled a turnaround strategy to restore financial health and boost the appeal of flagship brand Gucci. The Italian label accounted for around 60% of Kering's profits last year and was the company's big hitter until it stalled in 2023 as tastes shifted, and that dragged down the wider group's performance. The group said Thursday Gucci would improve its product quality and sharpen its regional sales strategy without giving financial targets for the brand. It also said it aims to double its jewellery business by 2023 to lower dependence on fashion cycles. As part of its turnaround, Kering said it would also aim to streamline aspects of the business into what it called hubs and would cut inventory, a drag on its profit and loss, by over $1.1 billion within 12 months. Doubling operating returns, which last year stood at 11%, would bring Kering closer in line with industry peers. 7 months into the job, Di Meo needs to reassure investors that his ambitious revamp won't be derailed by the Middle East conflict's fallout on luxury spending. Kering, as well as rivals LVMH and Hermes, said this week that the conflict significantly reduced sales in the Gulf region and had a broader impact. Thursday's update comes days after Kering said quarterly sales at Gucci continued their slide going into the year. It disappointed investors who wanted to see clear signs of improvement under a new designer and management structure.
And from there, let's pivot to policy stories emerging here from India. India is preparing a fresh push to strengthen its electronics manufacturing story. The government is likely to roll out the second phase of the mobile PLI, or the Production Linked Incentive Scheme, PLI 2.0, by the month of May, with an outlay of over $5 billion, or roughly 46,000 crore rupees. Officials say the new scheme aims to double India's mobile phone exports, building on the strong momentum seen under the first phase. Now, to put that in perspective, India exported smartphones worth nearly $28 billion in the year 2025, with companies like Apple driving growth. Now, the original PLI scheme, launched back in 2020, was aimed at turning India into a major mobile manufacturing hub. But the next phase is expected to sharpen the export focus even further. The proposal is currently under discussion between the electronics and finance ministries and will go to the cabinet for final approval. And well, India's largest airline, Indigo, is making a futuristic bet. Indigo, operated by Interglobe Aviation, has picked up a 10 crore rupees stake in Bengaluru-based startup Sarla Aviation, entering the electric air taxi space. The investment will support Sarla's Shunya platform, a 6-seater flying taxi designed for short urban hops. The plan is to launch operations in Bengaluru by the year 2028 using existing helipads across hotels, hospitals and tech hubs. And with that, we will slip into a very short break. But coming up on the other side, a very important story that we are tracking. Is there an agriculture crisis brewing in India? It's not a double whammy, but triple trouble. Rising fuel prices, short supply of fertilizers, and potentially a below normal monsoon. What does it mean for inflation, the economy, and for consumer prices? We'll bring you that on the other side of the break.
हमारे जवानों के कदम कभी न रुके, सिर्फ इसीलिए कहीं एक मजबूत पुल बना है। देश के नंबर 1 सीमेंट अल्ट्राटेक में हम मानते हैं, इंडिया बनता रहेगा तो आगे बढ़ता रहेगा। अल्ट्राटेक सीमेंट बनेगा तो बढ़ेगा इंडिया।
Others see a teenage tantrum. I see you standing your ground. I see you, my daughter, 16 and already owning your story. And I couldn't be more proud. For you, only natural diamonds.
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया.
After a blockbuster first season, where corporate giants and industry leaders rule the court, TV9 Network presents the ultimate corporate badminton championship season 2. A battle of skill, speed and supremacy, with a massive 5 lakh rupee prize pool across categories at Pulela Gopichand Badminton Academy, Gachibowli, Hyderabad, from the 15th to the 17th May 2026. The court is set. Let the battles begin. Catch the action only on TV9 Network. To register, log on to www.tv9x.com.
Associate sponsor KL Deemed to be University. Venue partner Pulela Gopichand Badminton Academy.
Sometimes I'm confused. Sometimes distracted. Still, I chase my dreams. I raise my voice for what I believe in. Winning at life is my habit. My life is in my hands.
Senco presents Bangal Utsav.
Welcome back. You are watching Morning Brief at 9. Well, the war in Iran has sent fuel prices soaring. Questions about petrol and diesel getting expensive after elections looms large. Now remember, commercial diesel prices were hiked in the middle of the conflict in the month of March, but retail prices could be the next casualty given the losses oil marketing companies are incurring. But in the background, another crisis is building and its impact could be even deeper and longer lasting. The Iran war is hitting India's backbone, its agriculture, from two sides at the same time, fuel and fertilizers. And there's a third dimension too, which is the monsoon. Let's take them one by one. Well, commercial diesel used by transporters, irrigation systems, tractors and generators by farmers have jumped sharply from around 88 rupees per litre to over 137 rupees per litre in a few districts in just a few weeks, an increase of nearly 50%. Now, what this essentially means is that even though consumers may not immediately feel the spike at the pump, the underlying cost makes farming more expensive. Then fertilizers. This is where the situation becomes structurally worrisome. India is the world's second largest fertilizer importer, and a significant portion of that supply comes from the Gulf region, routed through the Strait of Hormuz. Now, with that region effectively sitting in the conflict zone, supply chain is under stress. And then imports of finished fertilizers like urea, diammonium phosphate and ammonia are getting disrupted. Next up is India's own fertilizer production, which is also under pressure because nearly 30% domestic urea plants run on LNG, and about 50% of that LNG comes from the Persian Gulf. Now, in the month of March, gas supply to fertilizer plants was cut by as much as 40%, forcing shutdowns at multiple units, including plants in Punjab. Now, global urea prices have already jumped nearly 65% in the last 40 days, from about 40,000 rupees per ton to nearly 66,000 rupees per ton. But Indian farmers are still buying urea at a heavily subsidized rate, roughly 6,000 rupees per ton or about 270 rupees per bag. Now, this is less than 1/10 of global prices. This means the government is absorbing the entire difference. Now, last year alone, India spent over 1.8 lakh crore rupees. That's about $22 billion on fertilizer subsidies, and with prices rising, that bill is only getting bigger. Now, look at the timing of this crisis. India is just weeks away from the Kharif sowing season, when crops like rice and wheat are planted. The very crops that together consume over 60% of the country's nitrogen fertilizers. Right now, India has about 1.8 crore tons of fertilizer stock, but the requirement for the Kharif season is around 3.9 crore tons. This means a massive gap has to be filled in a matter of weeks. Now, farmers across states are panic buying fertilizers weeks before they actually need them. Retailers are reporting unusual demand spikes. Local shortages are beginning to show up, and in many places, there is no clear communication on supply timelines. And when this happens, it is the smallest and most vulnerable farmers who are the first to lose access. Now, add to that the third dimension to this story, which has nothing to do with the war, and that happens to be the monsoon. If rainfall turns out to be below normal this year, and that's an indication that IMD has already issued, then all three pressures collide at once. Higher input cost, uncertain fertilizer availability, and weaker rainfall. So, this is no longer just a West Asia conflict story. This is about India's farm economy and what it could mean for food on our plates in months ahead. Mithali Nikore, Chief Economist, Nikore Associates, joins me this morning. Mithali, good morning. Thank you so much for your time. Help our viewers understand how grave really is the situation. Is inflation on account of higher input costs and lower agriculture yields now near certain?
Good morning, Karthik. I think, very honestly, when we look at this situation, there is one actor here that still has a role to play before we get into, inflationary spirals, and that is the government of India. Now, we know that the government of India has a massive fertilizer subsidy program in the budget of 2026-27. Nearly 42,000 crores was approved as the fertilizer subsidy. And this is, in fact, orders of this magnitude have been spent by the government of India for several years in order to cushion farmers from the impact of global fertilizer price fluctuations. So I think this is one, very important instrument. And if you remember in your show, on the budget week, we were talking about the fertilizer subsidy. Do we still need the fertilizer subsidy? And truly, this is the test of that, one very unspoken about instrument, because what will happen right now is that the farmers will not see the input prices changing immediately. What will happen is that the government will have to pay a higher price for fertilizers in the market, based on the availability of the fertilizers. And what will essentially happen is that the farmers will probably see maybe a very small increase or even none if the government chooses to absorb the entire incremental price increase. So the worldwide price of urea, for example, has gone up to $1,000 a ton, and the peacetime price is around $700 a ton. So that's a $300 per ton increase. I mean, India is obviously importing several million tons of fertilizer, especially urea. So that is a big bill for the government to pay. But I personally think that they will pay it.
All right, but Mithali, at one end you of course have the subsidies, and the subsidies at best can only offset the cost pressure on farmers. The other more critical one happens to be the supply itself. So if nitrogen, if LNG supply is restricted, and overall if the supply of fertilizers becomes worrisome, then are we really looking at inflation coming and hitting our plates?
So I think, Karthik, to some extent, inflation has already come. So the last time we spoke, which was about 2 months ago, on inflation, is around 2.5%, because that was the day when the calculation of inflation itself was changed.
That's right.
Now it's gone up to 3.8%. For this quarter.
3.4%, if I'm not mistaken.
Yeah, I think some estimates are saying it'll go up to 3.8 also by the end of this quarter.
Right.
So we are already seeing inflation inching up, but in the absence of the fuel price cushion, in the absence of the excise duty reduction, in the absence of this fertilizer subsidy, we may have been, at a 6 or 7% mark already. So very honestly, there is, a lot of work that is going into protecting the consumers, protecting the farmers from a very massive inflationary spiral. But there is no denying that this war is essentially hitting those that it hurts the most. It's the informal workers who are going back to their villages and, cooking on, coal or traditional methods when they had become used to, LPG and LNG. It is the farmers who are now reliant on, again, more and more traditional methods of fertilizer usage. They might be, extending their fertilizer use more, using less quantities. We don't know what will happen to the crop quality because of that, and that will then impact farmer incomes in the next cycle. So very honestly, at this point in time, the government's bill in terms of just supporting these crises and helping the population weather these crises is going up significantly, because again, if there is a farmer income loss, at a massive scale, then the government will have to come in to bail them out and to, support them in the, of course, rightly so, but they will have to do it. So I feel like we already have to start planning for a farmer income support cushion from this point onwards.
Right, but what does that mean for government finances? What does it mean for India's fiscal deficit? Because it seems that even if inflation spikes, there is very little that the Reserve Bank will be able to do by way of monetary policy tweaks, because the problem is going to be supply side and not really demand side. So, what does it really mean for government finances if the government is expected to step in and, of course, rightly so, perhaps some would argue, support the most vulnerable?
Absolutely. And I think this is where we're going to feel the hit the most, the fiscal deficit. So if you recall, we had discussed that during the budget, the fiscal deficit for 26-27 is set at 4.3% of GDP. Now, as per our calculations at Nicor Associates, even if the excise duty, there is zero collection of excise duty for 3 months, the fiscal deficit will inch up to 4.5% of GDP. If that extends to 6 months, it will go up to 4.7. Similarly, now we're talking about a fertilizer subsidy increase that will have a further amplifying impact. If GDP growth goes down, then, the GDP base value itself reduces. So we could be talking about a fiscal deficit to GDP impact up to 5.5% of GDP in just 1 year's time. So that's nearly 1 percentage point higher than what was projected at the start of the year. At the start of the year, we were a Goldilocks economy.
Yeah.
Now we're facing stagflation just because of a war we didn't create.
Absolutely. And of course, somebody has to answer for the war, why that war really was initiated in the first place. Well, unfortunately, that's all we have time for this morning. Mithali Nikore, as always, pleasure having you here with us on News 9. And with that, we come to the end of this edition of Morning Brief at 9. Thank you so much for watching, but news continues, as always, right here on News 9.
India's #1 news network, and you're watching News 9, English news as it should be.
पता है ये लंबी सी मेट्रो लाइन क्यों बनी? सिर्फ इसलिए कि पापा जल्दी घर पर आए और ये दोनों उनकी गोदी में छलांग मार पाए। देश के #1 सीमेंट अल्ट्राटेक में हम मानते हैं, बनेगा तो बढ़ेगा इंडिया।
खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
Real power doesn't shout. It empowers. It leads by example. It walks the talk. And let actions speak the truth. Real power shines through you.
Amid a fragile ceasefire, stakeholders take on the tough questions.
Was Israel surprised by the asymmetric warfare which Iran started conducting?
Yes, I think it was kind of surprised the level of savagery.
Why has Iran stopped the traffic in the Strait of Hormuz?
So we have to defend ourselves.
Like never before, on point with Kartikeya Sharma, decoding Hormuz, Kharg and the ceasefire.
What is the future of peace in West Asia?
I hope that they got their lesson.
That are supposed to give a chance. We stay ready in case it doesn't work.
Every war has a political objective.
The voices that matter, only on News 9.
In Kerala, politics turns tense yet again.
Makalakka Namaskaram.
Can fate in Sabrimala torpedo politics? Will corruption allegations decide the mandate?